The Street opens lower on the back of softer global cues. The Nifty slips below that 24,300 mark, 24,250 now. The biggest loser are the metals. The mid-caps and small caps see a bigger cut.
The banking index comes under pressure after UBS issues a bearish note citing higher risk of non-performing loans and higher credit costs. The brokerage cuts targets on IndusInd Bank, Axis, AU Small Finance Bank.
Metal index, top sectoral loser today, stamping a 6-day gaining streak. SAIL, NMDC and Tata Steel lead losses.
Shares of Optimus trade lower after its board approves a 147 crore preferential issue worth around 147 crores at a price of around 672 rupees per share. That was at a sharp discount in comparison to yesterday's close price.
Greenply Industry is under pressure after the machinery breakdown at its Vadodara MDF unit leads to a temporary manufacturing slowdown.
Hello and welcome to Chartbusters. I'm Nigel and with me is Mangalam, and it seems for now the bears have started their Friday party early. The Nifty is under pressure. We're virtually at the low point of the day. 24,400 got taken out, 24,300 as well got taken out, and now we're on the verge of going to around 24,200. I'll tell you what, a couple of these larger cap names will have to put their hand out and get counted, particularly Reliance Industries and HDFC Bank. Both those two have moved to the low point of the day, but I'll keep an eye out on both these two, Mangalam.
The bulls might be, feeling the horror of Friday the 13th as the bears continue to party. We have the India VIX, which has actually spiked about 7%. So it's a big move that we're seeing on the way up itself. For the last few trading sessions, we were seeing some bit of consolidation. Typically, consolidation is a precursor to a big move on either side. Some part of the street was expecting, this move to be on the upside. It's come down on the downside right now. Last couple of days, the FI is selling in the cash market as well. 10% up move on the India VIX. So good time to bring in Manas Jaiswal for a quick technical check on the market. Manas, there's a lot of weakness. Metals are selling a little more, but there is no one particular sector which is selling, any more than the others apart from a few. It seems like a broad-based decline that we're seeing in our market, and the mid-cap weakness yesterday gave you a foreshadow into maybe what would happen today. So the question is, where do we go from here?
Good morning, Mangalam. So definitely because Nifty has broken 10, 20, 50 and 100 day moving average in a day. So it seems that we may see more downside and Nifty can go down and test 24,000 and 23,900. I think on recovery, I think one should exit from a long position, and now one should create long position only if Nifty breaks and sustains about 24,450. So the trend is negative, and I think on bounce back, one can create short position for the target of around 23,900. Even Bank Nifty has broken 20-day moving average today. I think in Bank Nifty, you can see almost 700 to 800 points downside from current levels. It can test 51,700 to 51,500. So I think here also one should be cautious, and on higher levels one should exit from the long positions.
Okay, exit on bounces. It seems that's the call that's coming in. Manas, what about individual stocks?
So two stocks which are looking weak on the chart. So first one is LIC Housing Finance, where the stock has broken the key support of 620. So take a short call here. Stop loss should be around 621. This is for futures. So 621 this should be the stop loss. And 590 would be the target of LIC Housing Futures. Second is the sell call on UPL, where stock has been making lower tops and lower bottoms, but today stock has broken its 20-day moving average. So here also one can create short position. The stop loss should be around 541 for UPL Futures, and target would be around 522.
All right, hold on there, Manas. I'd like your thoughts on a couple of stocks as well. Nigel, just a word on Zomato. The Zomato stock has recovered about 3% from the lows and now has moved into the green in an otherwise weak market for the broader markets or broader indices itself. The point that we had made in the morning, right, that, if there is a decline on account of the tax notice that the company has gotten, that may be used as a buying opportunity, because this is a seasonally strong, period for food delivery companies. And at the same time, these tax issues play out over a long period of time. The company has said that they will go ahead, appeal against it. So it's basically he said, she said sort of thing. The government will make their case, and the company with their legal experts, tax advisors, etc., will make their case. So it plays out over a period of time, not necessarily a major disruption in terms of business immediately. So that dip has been bought into. The other one I'm looking at is Jubilant FoodWorks as well. That one holds in the green in today's trading session, mildly in the green. So yesterday there was a big decline on fears that, maybe the deal that the Jubilant parent had done with the Coca-Cola beverage company, there could be something which would come by on Jubilant Foodworks as well. There was a lot of chatter around it and stuff as well. We tried not to, comment on any of that. Today, the company itself has clarified to the exchanges that there has been absolutely no relation, no change, and it is business as usual for them itself. So a couple of things that we'll be watching out for now is when does the Pepsi agreement with Domino's end? Because Domino's currently is tied up to Pepsi. With the parent buying stake in, the Coca-Cola bottling beverage, do they go ahead and replenish their earlier agreement of Coke and Domino's? So if that were to happen, then what happens to Varun Beverages is something that we'll be looking at. So those are a couple of things that we'll be watching out for. But it will not be a very big risk, no more than a sentiment risk, because at best, one institutional customer, which may not account for more than 1 or 2% of their overall sales itself. So this is something we'll keep an eye out on. But on Zomato, Manas, I wanted your thoughts because the dip has been bought into. Have you looked at the chart of both Zomato as well as the limited chart that we have for Swiggy?
So in Zomato, I think if you can hold the stock for next 3 to 4 months time, then definitely on this correction, you can accumulate the stock, keep the stop loss below 255. But if you're a short-term trader, then I think you should avoid taking long position on Zomato, because on the weekly chart, stock is making some bearish pattern. So I think for short-term trading, just avoid it. But if you can hold the stock for next 3 to 4 months, then you can buy on declines near 280, keep the stop loss below 254. Swiggy, I don't want to comment because I don't have much history on Swiggy, so I just want to avoid it.
Got it. Okay, all right. Manas, thanks a lot for joining in and giving us that quick take. Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Khushbu Rai of moneycontrol.com joins us to talk about a stock that she's tracking closely. Khushbu, over to you.
In today's idea for profit, we have Hindustan Unilever. HUL is a market leader in the FMCG space with strong presence in home care, beauty and personal care categories. The company has a vast essential portfolio and market leadership in most of the categories with a high brand recall. The consumption slowdown, which has impacted the company's growth recently, is expected to persist in the near term. However, the strategic focus on growth areas and superior brands will help HUL to capture future demand recovery. The recent announcement of the demerger of the ice cream business is a key factor to watch, which contributed around 3% to revenue in FY23 and includes key brands such as Quality Walls, Cornetto and Magnum. While the future path of the HUL's ice cream business is not clear, it is likely that the separate listing will help the company in value discovery. If we look at the valuation, the stock is trading at a PE multiple in line with the 10-year average multiple of the company. We believe that steady macros, improved execution, and rural consumption growth will drive valuation in the long term.
Okay, all right. Well, time to slip in a short break, but now it's time for the Growth Code, an initiative by Grow and CNBC-TV18 designed to help you navigate the market and make informed trading decisions. This week, we dive into the problem of revenge trading and equip traders with actionable strategies to avoid making emotional decisions.
It's that gut-wrenching moment when you watch the market turn against you in seconds. The panic sets in, your stop loss hits, and instead of stepping back, you tell yourself, I will get it all back right now.
It's not just about the money. It's about your ego, your pride, and proving to yourself that you're not wrong.
You're no longer trading a setup or a strategy. You're fighting the market as if it's a personal enemy.
Every decision becomes irrational, fueled by anger and desperation, until you dig yourself deeper into the hole. That's revenge trading, an emotional reaction to losses where traders take impulsive, high-risk trades to bounce back. Unfortunately, it's one of the quickest ways to drain your capital. In fact, in India, 80% of intraday traders who lose money double down on their losses. What's the smarter move? Pause and reflect. Step away from the screen after a loss.
अगर आपको रिवेंज ट्रेडिंग को रोकना है तो बहुत ही इंपॉर्टेंट है आप एक लिमिट सेट कर दीजिए कि मुझे अगर डेली का इतना नुकसान हो गया तो मैं ट्रेडिंग बंद कर दूंगा, या वीक में मुझे इतना नुकसान हुआ तो नेक्स्ट एक वीक तक मैं ट्रेड नहीं करूंगा.
Remember, trading is a marathon, not a sprint.
Welcome back. You're watching us here on Chartbusters. The decline for the market continues, nearly 285 points lower for the Nifty right now. The metals, they are taking the biggest knock today. The top sectoral loser, snapping 6 straight days of gains. Nigel, some data on the sector.
Well, that's right. As you said, right, it's run up for around 6 straight days. So that's why, in fact, it's coming for some profit taking is what I think. So even if you look at it in the last 1 year or so, the metal index actually has outperformed what the Nifty has done. And this is the backdrop when China actually is slowing down. So actually, it's been a relative outperformer. So one factor could be routine profit taking. The second factor is overnight, you had the dollar index that moved to around 107. It cooled off from around 107 to around 105.5. And now it's back at around 107. The reason that it's moved back up is because the street is a little bit cautious with regard to what the Fed will do next week. A stronger dollar is not good for base metal prices. So that's why, in fact, you're seeing some bit of profit taking. The third factor is China is likely to increase the fiscal deficit. I think it was at roughly around 3% for the past year. Now, probably it goes to around 4% in 2025. They're also looking to borrow more to provide some stimulus. So basically, a loose monetary policy is what they're looking at. However, the street wants some more concrete measures on ground. How will that property market, property market revive is something that the street wants further clarity on. The fourth factor is yesterday the steel minister made a pitch. They want some safeguard duties. I think the street took it that it's a done deal. It appeared so because all these stocks ended at the high point of the day. However, the steel ministry, we have Mr. Sajjan Jindal as well, that's been periodically making this pitch. We need some kind of duties in place. But we're waiting by for the fine print on that front. And also another factor is the yuan has depreciated a little bit. So it will nullify some of that duty that could be levied on that. And the final factor is, Pankaj Tibrewal, he is always on his game with regard to the numbers. He's given us a couple of numbers. He said that metals is the top contra call for 2025. He also made this point that the contribution of metals to the overall profitability pool has come back down to around 2001 levels. So that's why he believes that things will recover for 2025. Nonetheless, today, because of all these factors, metal stocks are the top losers in today's trading session.
You spoke about Pankaj Tibrewal, so let's hear out what he had to speak about the metal and cement space. Let's listen his view.
Couple of sectors which are looking probably interesting and maybe contra at this point of time. One, I believe, is cement. I think the worst in cement is behind us. The second, I think, is metals. It's a complete contra thought, but we believe that the contribution of metal sector to the overall profitability pool in the country is back to 2001-2 levels. And that's an interesting space to be in because two of the largest economies in the world will have a fiscal loose policy.
Okay, all right. Well, let's focus on a couple of other stocks then. Brokerage firm Jefferies, they have gone ahead and come out with a very, very interesting note on IOC. Sonal joins us to fill us in with the fine print of that particular report. Sonal?
Thank you so much for that. Well, these oil marketing companies did not see a good Q2, but now there have been a lot of reports and fundamentals which have improved in the refining sector as well. And that's why Jefferies has gone ahead. They have upgraded the stock to a buy from a hold. They've also increased the target price to 185 from 165 earlier. They say it is the largest beneficiary of improving refining margins because this particular company in all the OMCs has the highest exposure to the refining segment. And that is the reason their marketing volume ratio is the highest amongst the OMC peers, and that is something which will benefit IOC. The risk reward is now favorable after the recent correction that we have seen because the company or the stock is trading at a 70% discount to Nifty compared to the long-term average of around 57%. Of course, all marketing companies are always reasonably valued if we compare it to Nifty. So now the stock is down around 30% from the peak, but it's up around 9% from November lows. They expect further upgrade on these numbers, and that's why the stock is on our radar today.
All right, we take that point. Thanks a lot for that, Sonal. So that's about IOC. But the other two stocks which are buzzing in today's trading session, some order wins coming in from the defense sector, L&T and HAL. Vivek joins in for more.
Well, that's right. So important developments coming in both for HAL as well as L&T. When you're talking about the Ministry of Defense, the order flows there have come in. So as far as HAL is concerned, they've signed a contract with the Ministry of Defense. This particular order is worth almost 13,500 crore. This is for the procurement of 12 Sukhoi aircraft. With this particular order win, the YTD order intake in the manufacturing segment for HAL now stands over 39,000 crore. Now coming to L&T, remember the company has received an order for manufacturing 100 K9 self-propelled howitzers. The likely order size is over 7,500 crore. Remember, the company at the start of FY25 had given an order inflow guidance for the core business at 10% on a year-on-year basis. With this particular order win, some more comfort is being derived by the analyst community that the management will be able to meet its order inflow guidance.
All right, we take that point, Vivek. Thanks a lot for that. Meanwhile, a couple of stocks which are buzzing, bucking the declining trend. We have Bharti Airtel, which has now moved to the high point of trade. And apart from that, we have something like a Max Healthcare as well, which is bucking the general weakness that we're seeing in a lot of these insurance stocks. Take a short break, come back, get you an exclusive conversation with KV Kamath. Excerpts of that on the banking space itself.
Well, earlier we spoke to Timothy Moore, the Chief Asia Pacific Equity Strategist and co-head of Asia Pac Macro Research. Let's listen to excerpts from that conversation.
Be clear, our base case is for the U.S. to impose an additional 20 percentage point increase in tariffs on China and some tariffs on auto exports from Europe to the U.S. and from Mexico to the U.S., but not the across-the-board 10% tariff that had been threatened or raised as one possibility. India is, more of a domestically oriented economy. It's got much more domestic engines, as you well know, and so it may be somewhat affected by that, but certainly not as much as the more globally trade-oriented economies, whether it's China or Japan, Korea, or Taiwan. Those are much more in the crosshairs of that concern. Credit to corporate India for delivering earnings. I think that's really kind of the fundamental upside. Valuation-wise, I think it's a bit harder to argue for significant upside expansion from current levels, which are still 23.5 times forward earnings. That's still on the more elevated side of the range. I'd say the only way you could argue for that would be if the RBI continues to reduce policy rates and we get sort of interest rates coming down, perhaps more than we're expecting, and that could then give a little bit more upside on the valuation front. But I think those would really be fundamentally from an earnings and valuation perspective.
All right, let's get another view as well. Jonathan Garner of Morgan Stanley also spoke about his view on the markets. We'll keep an eye out on that. Just watch it.
We are optimistic that in the first half of the calendar year next year, so that is the second half of the financial year, as it were, in India, as we go through to the end of March and then the end of June, we will see a pickup. And so we are above consensus on earnings growth. Those earnings estimates have come down, but we think earnings growth moves back up again. And we have a 93,000 target for sensex for December of 2025, which means it's got more upside than pretty well anywhere else other than Japan. And we like financials pretty well everywhere other than in China. We also are overweight consumer discretionary in India and industrials. And we like the IT services names. They're very engaged and working hard on the AI rollout globally. And we're deep now into the shift from enablers to adoption. So adoption basically is AI being adopted by major software as services firms, major global financial services firms. So the India players in that sector are very engaged in all of that. And we are underweight the defensives and certain other areas like energy.
All right, we'll wrap up on this edition of Chartbusters with the news that the Nifty is still, down 300 points. It briefly fallen below that 24,200 mark as well. The low of today was 24,180. From there, it's seen a bit of a recovery of 70 points. But, a 300-point decline in the Nifty, a 1,000-point decline in the sensex is what the street is contending with bigger cuts coming in for the mid and small cap indices. Thank you for watching. Team of Trading Guard comes up next.